It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Mainland Chinese stocks extending declines ahead of Saturday's crucial briefing by the finance minister. Investors expecting around $280 billion of new stimulus. Asian equities outside China rising, though, as traders sidestep the hotter-than-expected core inflation printout out of the U.S. Three Fed officials seem unfazed by the CPI report. Plus, we take a look at the top contenders to succeed Ratan Tata as chair of Tata Trusts, a collective of charities that indirectly controls the $165 billion Indian conglomerate. And we're taking you live to Burbank, California, where Tesla is revealing its robo-taxi. It is being called a cybercab, rather. Musk says it has no steering wheels, no pedals. There you have it. Musk on the screen for that big reveal. It is long anticipated, of course. Musk's reputation at stake, we know, is Tesla's new business model. Tesla believes will power a transportation sector free of human drivers. Again, Musk saying that the robo-taxi is called cybercab. It'll have no steering wheel, no pedal, and it is a much anticipated reveal by Elon Musk, of course, and that's happening in Burbank, California. People say that a successful unveiling would help quell the doubts around Musk's autonomous driving strategy, and an event containing the type of gaffes that have troubled past product reveals could intensify them. We'll bring you the very details as they come along. Now let's do a check on how markets are faring with Avril Hong in the Lion City. Avril, trepidation ahead of what China intends to reveal on Saturday.
Yeah, that is, I think, the event of the weekend. Even as we kind of wrap out Friday in Japanese and South Korean equities, looking to end the week, the trading week, all on a good note, brushing off that hotter than expected US CPI print, as have a number of Fed speakers, save for the likes of Raphael Bostic. And if you take a look at swaps pricing as well, I think it's about 80% that they think there's going to be a chance of that rate cut come November. Not much of a move compared to what we saw right after that blowout jobs report. But this number from the US inflation print does revive those concerns in a way of inflation, or at least keeps the debate about whether we're going to see a pause or a 25 basis point cut in November alive. So we are seeing markets in the region brushing that off. But to your point about China, we also have, as investors watch out for Saturday's Chinese finance minister briefing, a number in mind in terms of fresh stimulus. They think $283 billion worth could be announced, and this could come in the form of bringing forward spending for next year to this year. We also had China announcing yet another briefing, that one coming on Monday. So you know that next week there's going to be a lot to digest. But to your point about trepidation, you can see how investors seem to be bracing for disappointment. CSI 300 erasing the gains of about 1% from just a day ago. Flip the board. Aside from the US and China, I also wanted to talk you through what we're seeing in Korea. We saw the central bank there trimming rates. This was as expected, joining that global wave of easing. What was interesting, though, is how markets didn't really move on that decision. It was as expected. But what did move the needle slightly was the governor talking about how 5 out of 6 of the board members see the rate kept at 3.25% for the next 3 months, which suggests they are in no rush to cut. And we are seeing that Korean won continued strengthening there, extending some of those gains for the board again, because as we watch out for that big event on Saturday morning, 10 a.m., I also wanted to talk you through what we've seen since that joint Big Bang briefing from Chinese authorities 2.5 weeks ago. In a matter of about 8 trading sessions, we've seen $2.23 trillion in turnover. This averages out to about $275 billion, and that's about more than 3 times what we see on the S&P 500's daily average turnover for this year. So keep that in mind. That could be at stake as we look to events of tomorrow, Has.
Avril Hong, thank you so much for that. Of course, that frenzy unlikely to abate despite that the finance minister out with some details on Saturday. Well, China investors, as Israel had, analysts are hoping for as much as $283 billion in fresh fiscal stimulus from Beijing, and that's to shore up the economy, boost confidence. That's a view from a new Bloomberg survey ahead of a briefing tomorrow from the finance minister. For more, let's bring in our China correspondent, Min Lo. Min, what else are analysts looking out for?
Yeah, as you said, that Bloomberg survey of 23 market participants showing that the consensus now is that the government will roll out 2 trillion yuan in additional fiscal stimulus. There are 4 participants, though, expecting something to the tune of 3 trillion yuan and above. Bloomberg Economics, however, thinks that there is not going to be any fresh stimulus at all. So pretty divergent views as we head into that briefing tomorrow. Also interesting that they're doing it on a day when markets are not trading, perhaps to give investors a couple of days to digest that and to trade rationally on Monday. Bloomberg Economics is saying that because fiscal spending has been lagging behind the budget this year, 55% of the budget this year has been spent. So they're expecting the MOF to accelerate spending of the unused funds and bring forward next year's quota of local government bonds and special sovereign bonds as well to this year. And that means more forward planning and fundraising for related projects could begin this year, but spending will likely still only take place next year because we're already in mid-October, not a lot of time left. But you saw on the screens earlier, investors looking out for measures to boost consumption. So that's key to watch. Aside from the number is what this policy will target, whether it's going to be more of the old playbook of infrastructure investment and supply side intervention or more demand side stimulus when it comes to consumption vouchers, support for families with children, greater social safety net, subsidies for the elderly and the poor, and expansion of that equipment upgrading program. And also whether the government will announce an expansion of the usage of local government special bonds to buy up unsold homes in the property sector.
The focus, of course, the economy, and we're keeping an eye on China inflation data. What is anticipated?
Yeah, that's coming out this weekend, not looking very pretty as well. September Consumer Price Index expected to remain at 0.6%, and that means it will be the 19th straight month of inflation falling below 1%. And Producers Price Index, that's expected to extend declines for the 2nd straight month. It's already in negative territory, by the way, for close to 2 years now, partly because of falling commodity prices, especially before China announced that big stimulus. And it's not just prices, it's also wages for 3rd quarter declining by 0.6%, at least for hiring wages for new graduates, for example. That's according to an online recruitment platform, Zhaopin. And year to date, quarter by quarter, if you compare the numbers, it's just been a consistent downtrend. So we're seeing a worsening of that deflationary spiral going on. And that's against the backdrop of the unemployment numbers ticking up to 5.2%, record high youth unemployment in August as well. So overall data not looking very supportive, and that's why those economic stimulus on the fiscal side is becoming ever more urgent.
Bloomberg's China correspondent Min Lo, thank you so much for that. Even as we keep an eye on China, we're keeping an eye on what's happening on Burbank, California, where Elon Musk is revealing that much anticipated robo-taxi called Cybercab. Robo-taxi has no steering wheels, no paddles. The Cybercab is Tesla's new business model. All eyes on whether it will materialize or not. Musk saying that the Cybercab will cost under $30,000. Production will start in 2026. Of course, he says the Cybercab will be for sale to the public. Again, that robotaxi being revealed in Burbank, California by Musk himself. Speaking at that event, he says it will cost under $30,000 each. Production to start in 2026. Let's take a look at where we are in terms of some of those lines coming out of Korea. We're hearing from the Governor Ri, saying that the BOK has room for more cuts as the rate is above a neutral level. Of course, this on the back of the much anticipated move today, the BOK cutting rates by 25 basis points, and Ri coming out to say that the BOK has room for more cuts as the neutral rate is currently above, that neutral level. Let's get more on that markets and perhaps those lines out of Korea. MLive strategist Mary Nicola. Not surprising, though, what the BOK governor is saying.
No, it's not, because we saw inflation last month fall below 2%. So there's obviously plenty of room for them to cut if they needed to. But they've taken a little bit of a cautious approach. So even he described it as a hawkish cut. And some of the members are not expecting to cut any more this year, because largely they still have concerns about household debt. And if they're worried about household debt and obviously the rise in house prices, they don't want financial conditions to become unstable and any financial instability. So the BOK's got a little bit more to worry about and a few more things to weigh in before they consider cutting in the next meeting.
More rooms to cut, but not happening at the next meeting. Of course, all eyes also on the Fed now with the pretty solid CPI print on top of that labor data, which is pretty strong as well. I mean, we have to wait and see.
Yeah, absolutely. And that's the thing. So the Fed, the fact that they started cutting has laid the groundwork for a lot of the central banks in Asia. So that's been quite clear. But now it's the fact of the data isn't as weak, which is great for Asian equities, because then we're not rushing for cuts because of demand destruction in the U.S., because that would obviously hurt, because then we're playing the recession card, right? So there's still a fact of how quickly will they go and how much looser does liquidity conditions come through that it helps stimulate, some of the broader risk on environments. I still think we're going to get a broader rally. I think it's still there, especially because of the fact that the U.S. is holding up, and it's not only the U.S. that's starting to cut rates, but it's also globally. So the ECB, the rest of the BOJ isn't going anywhere anytime soon. So there's still a lot of ample liquidity and looser financial conditions globally.
All right, Mary, thank you so much for that. Bloomberg MLive strategist Mary Nicola. We're getting back to Burbank, California again, where Tesla has revealed that robo-taxi called Cybercab. We have Mars unveiling that robo-van at the same event as well. So Tesla not disappointing with today's unveiling, a much anticipated unveiling, not just a robo-cab, but also robo-van. This in the context of Tesla unveiling a new business strategy. Of course, it remains to be seen how this strategy might play out for Elon Musk. Again, if you're just joining us, that robotaxi has no steering wheels, no paddles. It is called Cybercab, and it will be priced under $30,000 each. Of course, we just talked about how that robo-van has also been unveiled. And in terms of production, the Cybercab will go into production in 2026. Well, still to come, Temasek CIO Rohit Sipahimalani tells us how China's slowing economy is disrupting supply chains across the region and creating new opportunities. Keep it here with us. This is Bloomberg. Welcome back. China's slowing economy is creating an opportunity for other economies in the region to fill the void. I spoke with Temasek Chief Investment Officer Rohit Sipahimalani about which markets are best positioned to take advantage.
Both Southeast Asia and India are going to be big beneficiaries of this supply chain diversification out of China. Actually, interestingly, some of the biggest offshorers out of China are not MNCs, they're Chinese companies themselves. Because they realize if they have to address markets in the US or Europe, elsewhere, that they need to have a base outside China which is seen as somewhat independent from China. Now, unfortunately, India is not receptive to Chinese entrepreneurs coming and moving, setting up things. So actually, ASEAN is a huge beneficiary of that. Malaysia, but Vietnam has been a big beneficiary. I would say across the region, I would see this region benefiting from that a lot. And when it's multinationals sort of moving out, I think this region will benefit, but I think India will also be a big beneficiary out there, because India has the scale for some of these multinationals to really scale up what they were doing in China. It will take time, but I do think that's a big opportunity. So In India, we've traditionally invested in things like financial services, healthcare services, consumer. But the one area which we're increasingly looking at right now is also manufacturing, logistics, warehouses, because we do see that being a new growth engine for India because of this.
And that was part of my conversation with Temasek CIO Rohit Sipahimalani at the Bloomberg Buy-Side Forum. Let's bring in our guest who believes China's stimulus measures will also have a positive spillover effect on Southeast Asia, mainly in the region's tourism sector. Yun Liu is an ASEAN economist at HSBC. Yun, so it does seem like, Southeast Asia benefiting from a China Plus One, also from investments going into China.
Yeah, that's correct. I mean, we see so much, FDI relocation from China to Southeast Asia. And I think for a lot of the Chinese manufacturing, since the U.S.-China trade tensions, we've been talking about a lot of multinational corporations, moving factories, moving their capacity to Southeast Asia. But there's also the Chinese manufacturing is there coming as well. And we see that trend to continue.
But isn't that a risk? We're keeping an eye on the U.S. Elections, and U.S.-China tensions will play out. We talk about those tariffs and possibly trade measures that the U.S. may adopt. And for those Chinese companies investing in Southeast Asia, they could be caught in the crosshairs.
Well, I mean, I think, not only for Southeast Asia, actually for everybody in different regions in the world, we all have our eyes on the U.S. election. But at the same time, there are also a lot of moving parts, who the next president is and exactly what kind of trade policies we're going to see towards, not only towards China, but also towards Asia. I think there are still a lot of moving parts.
What are you anticipating in terms of policies that could affect Southeast Asia?
Well, I mean, for now, I think it's still too early to tell. And it's the same thing as, it's still too early to tell who's going to win.
65% tariffs on Chinese imports could have ripples throughout the region.
Well, I mean, if we look at the trade tensions, when Trump was the president, right? I mean, we're seeing so much FDI and export diversion to ASEAN, and a lot of it is actually very much, the legit manufacturing capacity expansion in ASEAN, and I think it also depends on which sectors we're talking about. So I think for now, still too early to tell.
Which are the bright spots in Southeast Asia? I've seen that in terms of Vietnam, you're pretty upbeat. You've just upgraded the growth potential for the country.
Yes, correct. So I just upgraded our GDP growth forecast for Vietnam to 7% from 6.5%. And I mean, really, I think from an FDI perspective, here are two clear outperformers in ASEAN. One is Vietnam. The story, I think, is more widely known, especially in terms of that capacity in the consumer electronics. The other one is Malaysia here. I think Malaysia, is very much a hot story in recent months. Malaysia's economy very much well diversified, in terms of its composition of exports. We're seeing a lot of semiconductors, commodities as well. But then at the same time, is also the trading partners. So these two countries really are the biggest beneficiaries.
I just have a headline to tell our viewers about Nomura. Japan's finance ministry suspending Nomura from debt auctions. Nomura admitted to Japan's financial regulator that it had manipulated the government bond futures market, following a probe by the securities watchdog into transactions 3 years ago. Just to keep our viewers updated, Japan's finance ministry to suspend Nomura from debt auctions. Of course, the Japanese brokerage has lost bond underwriting deals over the probe and faces regulatory fine for JGB futures transactions in 2021. Just to recap our conversations, when it comes to Vietnam, given that China is on I guess, slowing growth path, how might that impact its FDI into the rest of Southeast Asia?
Well, I think, in terms of that growth FDI, correlation is not really a one-on-one. And in fact, I've seen actually acceleration in, China's FDI coming out of China and then coming to Southeast Asia, not only in terms, in Vietnam, Malaysia, we've seen also a lot, Thailand as well, Indo in the EV sector. So it very much depends on which economy we talk about. But I think a lot of the Southeast Asian economies, a lot of them are really benefiting from this FDI relocation.
Yun Liu, have to leave it there. Pretty short conversation today. Longer next time, perhaps. Yun Liu of HSBC. Plenty more ahead. Keep it here with us. This is Bloomberg. And we're taking you back to Burbank, California, where the big reveal is happening. Tesla unveiling that cybercab costing under $30,000, production to start in 2026. Also unveiling that robo-van. And speaking of unveiling that Optimus robot, that humanoid robot, which could cost also about $20,000. Of course, this is all part of Tesla's new business model. Whether or not this is going to be profitable for the company remains to be seen. Let's get to the man who's been on top of the story, Bloomberg Technology co-anchor Ed Ludlow, joining us now from LA. Ed, a big day for Tesla.
There's pieces of information that are surprising and that will be exciting for investors, but let's talk about the reality of them. So it is a big surprise that Cybercab, this purpose-built robo-taxi, will be sold directly to consumers. It will be available for purchase, and as Elon Musk said, it will be available for below $30,000. He said it will go into production in 2026. However, Elon Musk is often wrong in his predictions about the timeline for products coming to market. And often when a Tesla product does come to market, it's at a much higher price point than he had stated on stage. So I would put that caveat in there. The other thing I would say is that it's a prototype. They have 20 of them right now, which is interesting. You remember that we reported they had actually delayed the event from August to October. And one reason is they just wanted more to show for it. Well, they've got 20 versions of it to show for it, which is interesting. And the other thing you mentioned, the robo-van, that is a big surprise indeed. And you're looking at it on your screen right now.
A lot is at stake, Ed, for Tesla. A lot at stake for its $800 billion market cap. I mean, how do you think this is going to be received?
I actually am not sure. I'm really interested to see how the market wakes up to this in the US morning, because there was actually a lack of information on the business model side. What they talked about was this really low cost per mile of operation. They talked about sort of 5 to 10 cents per mile, which is very low in the context of robo-taxi or autonomous driving companies. But how do they know that? It's very hard to model for. The big picture is a future where Tesla does not sell EVs to consumers necessarily. It runs a proprietary ride-hailing app with purpose-built robo-taxis that either the consumer owns and gives back into a fleet, or that Tesla owns and operates. And I was expecting Musk to talk more about that. He did not. And so for the investors to join the dots, to see the jump of where Tesla is currently to that future, those things are unanswered, and it will be interesting to see the sell side and institutional reaction. But remember, the retail investors are such a big part of the story, and many of them are in the audience of that event right now.
Isn't it true, Ed, that the reveal has been priced in already? The share's up about 70%.
Maybe. Yeah, it's hard. I mean, there was a phrase. There was a phrase that was used earlier by the China Open Angers, which was the dream trade, right? This is the dream that Tesla has. But the reality is that they're in the business of selling electric vehicles. A higher rate environment around the world has made that very hard. They are having to do that, right? Whatever the dream is in the future, they have to continue operating and drawing profit doing that business model. And so it will be a very long time before this is a reality. The unanswered question, regulatory approval.
Great to have you on the show, Ed Ludlow, Bloomberg News technology reporter and co-host of Bloomberg Technology. Plenty more ahead. Keep it here with us. This is Bloomberg.
I think we probably would get some guidance, but I think what the market is hoping for, like if we need some kind of budget expansion, we still need the approval from the NPC Standing Committee.
I think that change in policy reaction function to something that's more aggressive and coordinated, we definitely have conviction in that, as we have seen from the Politburo meeting, from the coordinated action so far. But what we still need more details on is really on the size of the policy support. I know we're all waiting for the Saturday's press conference to get a bit more detail of how much we're actually getting on the fiscal side.
The
the magnitude of the stimulus does matter. It's because I think the market expectation has run high. And I think whether it's 2 trillion or even above 2 trillion, definitely there's some expectation there.
Some of our guests sharing their expectations for China's finance ministry briefing tomorrow. And as we speak, China close to heading to lunch. Let's get some details from Avril Hong here in the Lion City. Avril.
Yeah, they've entered the lunch break on the mainland with those declines of about 2% on the CSI 300, more than erasing the 1+% gains just a day ago. So it really gives you the sense of how investors are bracing for disappointment here out of tomorrow's briefing. And that is despite the fact that some of these investors have a number in mind, that $283 billion potentially worth of stimulus. Whether it comes in what form or the timeline for that, that is another question. And also the negativity that we're seeing in markets today comes despite the announcement of yet another briefing on Monday, this time one that potentially could go on to support firms. So this gives you a sense of how investors are positioning going into the weekend. Of course, Hong Kong is shut today. Let's flip the board. Japan is back from the lunch break, and we are seeing some gains among the banks as we see higher long-term yields. But a number of other stocks that I wanted to highlight, Fast Retailing, that is the Uniqlo owner, it upgraded its targets for sales and it sees the strength of its Western markets really helping things along. So that also helped to prop up the stock. It, of course, beat on earnings expectations, but going the other direction, the Japanese retailer 7&I, after it trimmed its outlook, but also said that it plans to split its business into two, all as part of efforts to sort of fend off this takeover bid by the Canadian firm Couche-Tard. So these are the firms that are in focus in Japan today. You see the yen there moving at around the 148 level. It has been relatively weak. Let's flip the board and take a look at the Korean won. Today we got the Bank of Korea decision. As expected, it cut rates. Meantime, the Bank of Korea governor has also said there is room for further cuts given how the rate is still above neutral. But what markets seem to be more focused on is how 5 out of the 6 members actually think that in the next 3 months, the rate will be kept at 3.25%. So maybe to some, this is a hawkish cut, a bit of a tailwind for the Korean won. Has.
Avril, thank you. Let's dig deeper into the Bank of Korea's rate decision and policy comments with our senior editor, Brian Fowler. Brian, what's standing out for you from Governor Rhee's press briefing?
Yeah, it was a very clear message. It was indeed a hawkish cut. Governor Rhee said as much. The board did something with its policy statement that was significant. The very last line of the statement back in July said that it would consider timing for rate cuts while maintaining restrictive settings. That part is gone now. There's no pledge to maintain restrictive settings. So it's definitely moving toward neutral, even though settings remain right now on the tight side. And as we just heard, 5 out of the board of the 7 board members see the rate staying at 3.25% over the next 3 months. So there's the chances of a cut next month for its last meeting of the year are pretty much zero. So the next time we might see a cut would probably be January at the earliest. It's definitely going to be on pause for a little bit.
What do you make of the BOK's adjustment to its restrictive stance language?
Well, I think the BOK is getting on board with a lot of other developed market central banks in shifting to an easing cycle here, but it remains a little bit cautious about how that rate cut might affect the housing market and household debt. That's been its primary concern of late, even after consumer prices slipped and inflation fell below its target. So I think it wants to continue watching to see how this rate cut affects the debt market and see if people respond by taking on more debt and possibly risking financial imbalances. And that'll be the main thing to watch over the next 2 months ahead of the timing for the next potential cut.
Meantime, in Japan, Brian, BOJ Deputy Governor Ryozo Himino, he signaled no change to the BOJ's rate hike plans while also discussing recent communications challenges. Let's take a listen.
There is no silver bullet in better communication. Each approach comes with pros and cons. And I would say that there is no clear consensus yet among board members about which approaches to pursue. But I can testify that there is a strong will among us to learn from what happened and continue to try to do better.
So where does the BOJ stand now, Brian? Is there any clarity?
Yeah, there's absolute clarity. So first of all, one of the interesting things the deputy governor did last night was he read verbatim from the July statement. And that's not because he was too lazy to come up with something new to say. He was basically sending a deliberate signal that there's been no change to BOJ policy, even with the new Japanese government having been installed. And so he's saying we are still on the path towards rate hikes in the future. But again, there's no hurry to do this. They're not going to hike this month. The chances of a hike on October 31st are pretty much zero. And to the point on communication, the BOJ is going to make extra efforts to make sure that the market is well prepared ahead of its next move, because it learned from what happened after the July hike that it needs to make sure that there's no shocks, nothing that's going to cause turmoil in financial markets.
Brian, thank you so much for that. Bloomberg senior editor Brian Fowler. Still to come, the death of Ratan Tata raises the question of who will succeed him at the trust that wields massive influence over the Tata Group empire. We'll discuss the contenders next. Keep it here with us. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching India Focus, and we're taking a look at Indian markets just ahead of the open in about 6 minutes from here. Futures pointing to lower open. The Sensex down about 0.2%. Now, staying with India, India's Tata Trust is now in the process of selecting a successor to the late patriarch Ratan Tata. The businessman's half-brother, Noel Tata, has emerged as one of the top contenders. For more, let's bring in our conglomerates reporter, PR Sanjay in Mumbai. And Sanjay, we know that Ratan Tata was not married. He did not name a successor. He has no children. So what do we know?
Yeah, so we spoke to Tata Trust, representatives of Tata Trust. First thing first, they are saying that it is too early to comment on any front-runner or contender or potential candidates or succession planning, because the legendary Ratan Tata, the name which cut across in an Indian business landscape, passed away yesterday. And so they are saying that it's too early to take a decision on this thing. But what we are picking up is this is one important thing which the global community is looking at, because Tata Trust owns 66% of Tata Sons Private Limited, which is holding company of Tata Group. So it is very, very important decision. The whole community, business community, investor community, all are waiting who would be the potential successor to Ratan Tata. What we are picking up is the front runner for this successor for Tata Trust could be Noel Tata. That is, Noel Tata is like one of the front runners, and Mahili Mistry, who is a close confidant of Ratan Tata, is also on the list. And at the same time, there could be a dark horse like Darius Kampata, who has returned to the Tata Trust after 7 odd years. Now he has won the confidence of the Tata Trust trustees. So he could be another dark horse. And what Tata Trust is saying, that there's no immediate issue of succession planning, because there are two vice chairmen. One is Venu Srinivasan and Vijay Singh. Both are they've streamlined. They made this Tata Trust well-oiled machine, and there was no problem. And Ratan Tata was very happy about these two chairmen, Vijay Singh and Venu Srinivasan. So they could also be potential. Vijay Singh is a senior to Venu Srinivasan, and both these two could also be a potential contenders for the successor to Ratan Tata and Tata Trust. So the list what we are now listening to us, we are picking up as one is Noel Tata, who has been successful in steering Trent, the retail company of Tata Group, ahead to the real glory. That is one. And Mehli Mistry, who is close, confident, and one of the key trustees of Tata Trust. And Venu Srinivasan and Vijay Singh, both are now currently serving as vice chairman for Tata Trust. And Darius Kampata, who is a legal eagle,
right,
who has been advising Tata Trust and Tata Group as well.
Sanjay, is it surprising that there is a leadership vacuum right now?
Not really. So we had specifically asked the representatives of Tata Trust. What they are saying that Ratan Tata has made sure that the Tata Trust are running very smoothly, like a well streamlined, well-oiled machine. That's why he has actually appointed two vice chairmen, two industry veterans. One is former Defense Secretary Vijay Singh and an industrialist Venu Srinivasan, and both have excessive experience in running NGOs and philanthropist organizations. Venu Srinivasan himself is running a philanthropist organization, and they have been proven track records in running one government departments and an industrial body too, and an industrial house too. I'm talking about Venu Srinivasan and Vijay Singh. So both. So there's no immediate vacuum. There's no issue about succession planning immediately. That's why they were saying that it's too early to comment upon a potential succession planning put in place at this point of time. But they are thinking that there will be a unanimous decision, and there won't be any controversy surrounding this picking a successor to Ratan Tata. That's what the representatives of Tata Trust are telling Bloomberg.
Sanjay, thank you so much for that. Our conglomerate reporter, PR Sanjay in Mumbai. We're counting down to the India Open. In about 2 minutes from here, and futures pointing to a lower open. Of course, this is a market that's been impacted by the flows into China. Some say perhaps that funds are taking money out of India to put into China to ride onto the wave that we've seen in terms of the stock market. Sensex index currently down by 0.2%. The Indian rupee 83.96. 37. Let's get more on the Indian market. Lakshmi Iyer, CEO for Investment and Strategy at Kotak Alternate Asset Managers. She joins us from Hong Kong. Good to have you with us. What are you seeing in terms of that fund flows from perhaps India to China? How bad is it? Might we see a reversal?
Yeah, hi, Haslinda. This is a very, very raging debate, and it actually comes at a time where, if you look at relative valuations, one country over the other, obviously China is looking relatively cheaper. But I must tell you that if you look at the retail flows in India, that continues to be pretty robust, though the foreign institutional investors are net negative on the Indian equities so far this year. I think the retail tsunami, where you have an annuity-based monthly flows of close to $3 billion, is clearly driving the momentum in the markets yet. So I don't think we are so worried about potential flows which could kind of dwarf the Indian sentiment in favor of China. At least that's not the concern right now.
So those the $3 billion retail flows are likely to provide that support. The RBI might also provide a support. It is it is set to cut rates, some say, in December. Might that provide the lift that Indian stocks need?
So two parts to it, yes. With a stance change to neutral that we saw in the latest policy, at least the road seems to be open for a potential rate cut. I'm not too sure whether it's going to be December or Feb, but if you look at the very near-term domestic indicators, there has been some sort of a lull, if I were to say, whether you look at the passenger vehicle sales, whether you look at the GST collections, and of course, more importantly, overall, some sort of a demand kind of a sapping off. I think all of these put together could possibly mean that over the next few months, earliest obviously being December, we could actually start seeing rate action in India. And let's not forget, we're seeing globally a very similar kind of syndrome. So will the central banker really wait for the actual slowdown to actually start easing? Well, probably not.
Lakshmi, if the assumption is that RBI will be cutting, how do you position for that? I mean, you would imagine bank stocks would benefit.
Absolutely. So I think interest rate sensitives is something that will continue to be the derivative or the positive beneficiary of rate action. Consumption is again a theme, obviously inward facing, less vulnerable to external shocks. I think that could be the next best beneficiary. But I think, more than that, currently, with so much of expectations which have actually got built into the market, what we are actually suggesting to investors is to kind of tone down return expectations from Indian equities, and it could give you, more muted returns, given that bulk of the front loading, whether it's this year or whether it's the past year, is pretty much baked into the prices right now.
How about Indian bonds? Since the inclusion, it does feel like investors can't get enough of Indian bonds, and there seems to be a shortage.
Precisely. So if you look at, again, the year to date, the foreign investors have pumped in close to about $15 billion into Indian fixed income. And this is at a time where Indian equities, they are net sellers. And after 2017, this is the highest net positive flow that we're seeing in Indian fixed income. With the inclusion of Indian bonds in the FTSE, which is the impending one for the next year, 2025, we think that the sentimental boost for Indian bonds is going to continue. And I think that is going to be a very, very strong, I would say, trigger to anchor bond yields probably at the current levels. And if the rate action actually starts sooner than expected, we could actually see these bond yields, which are currently at about 6.75 odd levels, slide towards the 6.5% mark over the next 3 to 4 months.
We know that Hyundai's India IPO unit will likely move markets as well. How much will that provide a boost for Indian equities, do you think?
So again, as I said, bulk of these news points, including the IPO, etc., are kind of, baked into the prices. Markets are going to look forward to how we are in the midst of the Q2 earnings period for India. It's not looking extremely exciting at the current juncture. In fact, after almost 15 to 16, 17 quarters of great numbers, this quarter could well be a muted number as far as the aggregate, the Nifty 50 or the BSE 30 stocks are concerned. So I think those would probably hog a little bit more of center stage. But yes, it is going to be the mother of all IPOs in terms of size. Really exciting.
Do you see private deals getting impacted by more companies going public?
Sorry, I didn't get the question.
Do you think private deals will get impacted with more companies going public?
So private deals, definitely, we do identify and we do have stakes in, late-stage growth companies. Most of them are getting, kind of the confidence to actually go public. So yes, this will pave the way for many more private companies to actually take the public route, and this will unfold over the next 2 to 3 years.
Lakshmi, before we let you go, talk to us about your wealthy clients. How are they deploying that capital? What's their appetite for at the moment?
So there is appetite across the spectrum, but clearly they are looking out for diversifying outside of India. Definitely China seems to be one market that they are looking over and above US and specifically the tech sector. Gold as an asset class, which is specifically within the precious metals piece, is something which is definitely attracting a lot of investor interest, institutional as well as large family offices. Bond seems to be there in the radar, but looking at the kind of returns the other asset classes have generated, that's falling a little bit pale, but that's definitely third or fourth into the radar. But I think these are the two asset classes which definitely is exciting investors, and some geographical diversification is definitely on their minds.
Lakshmi, thank you so much for joining us today. Lakshmi Iyer, CEO, Investment and Strategy at Kotak Alternate Asset Management. India's been trading for about 5 minutes. We know that the benchmarks are under pressure. Sensex index currently down by about 0.2%. We have HDFC Bank dropping about 0.6%. Power Grid also down. It is the biggest decliner as we speak. In terms of the rupee, 83.9688, pretty flat versus the USD. We're keeping an eye on India's industrial production data due out. Growth seen as decelerating to 0.8% year-on-year in August versus 4.8 back in July. Again, Indian markets under pressure. Plenty more ahead. Keep it here with us. This is Bloomberg. Taking a look at where we are in terms of those benchmarks in Asia, shrugging off that harder than expected CPI out of the US MSCI Asia Pac Index, up 0.3%. Of course, in terms of Japan, it is about the yen really amongst the most vulnerable, with the BOJ seen pausing its tightening till perhaps next year, about a further slide to 151.55 may just prompt an earlier rate hike for the BOJ, and that's of course according to an ex-BOJ director. In terms of the Nikkei 225, in positive territory, up 0.6%. The Kospi also higher. We had the BOK cutting rates by a quarter of a basis points as expected by the market. Korean won currently at 13.46. It is higher versus the USD by 0.6%. Gains in Taiwan and the ASX 200 index. We're keeping an eye on China in particular. Of course, Chinese stocks continue to be whipsawed as we await that for that presser on Saturday from the Finance Ministry. Focus will be on its policy details to support growth. We have the likes of Renaissance saying that the CSI 300 index is set to surge another 50% from here, hitting 6,000 in about a year. Of course, we took you to Burbank, California for that unveil. Let's take a look at how Tesla related stocks are doing at this point in time. Elon Musk unveiling that long-awaited prototype of a Tesla robotaxi called Cybercab, saying that production may start in 2026. You're talking about the price? Well, it could cost less than $30,000. LG Chem up 0.6%. Ganfeng Lithium currently up by 0.7%. Of course, he also unveiled that Optimus robot, that humanoid robot that could cost up to $20,000. And in terms of Nomura erasing gains, it is to be suspended from JGB auctions. Let's take a look at how it is trading at this point in time, down 0.2%. That is it from Bloomberg Markets Asia. This is Bloomberg.